Welcome back to the channel, guys. In today's video, we are going to find out how to invest our first $1,000 into cryptocurrency to get an 11% passive income return. Let's dive into the video and discuss how we're going to get 11% passive income returns on our first $1,000 in cryptocurrency. Plus, I'll show you 3 different portfolio setups, 2 with $1,000 and 1 with $3,000, just a little bit more to see what we can do at that point when we do have a little more money. Now for this video, you're going to need to use the cryptocurrency app, crypto.com. You can download the app, you can go onto their website, you can check out all of the details over there. I've done several videos on how to set your own account up in those videos. I'll leave a link to those above here and also in the description so you can go and check those out at any time. It's a really easy setup. You can basically do that while you're watching this video, download the app onto your phone and then start the process to get set up if you haven't done so already. Now, this isn't the only way to create your own passive income stream using cryptocurrency. There are several other ways, but I'm going to make it as simple as possible in this video and just stick to the one method at this point. I will make future videos on how to make passive income through other methods in cryptocurrency and stock market trading. So if you like the sound of that, be sure to hit the like button down below, subscribe for more videos like this, and you'll get notified when those videos are released. I've personally used this method to create passive income on Bitcoin, Ethereum, MCO, CRO, and a couple of other cryptos. But for today's example, I'm going to set up a few different portfolios for you guys to mitigate the risk across different types of asset classes like gold, stable coins being fiat currency, and low and higher risk cryptocurrencies. As the title of the video suggests, we're looking to make between 8 and 11% return on the money that we're investing. So with that in mind, there is one other thing I would suggest doing before you go to invest your money into cryptocurrencies. And that also has a disclaimer on it, but I'll get to that in a moment. And essentially, you want to pay down any debt that is owing more than the percentage return that we're looking to get in cryptocurrencies. So if you've got a credit card debt or a car loan or something like that, which is above 11% that you're paying per annum, then you'll want to pay those down because immediately you're going to save 15%, 20%, whatever it is that you are paying on those cards or car loans. So you're already making a gain in that sense. Now, the disclaimer that comes with that is possibly the things that you're investing in, say Bitcoin, Ethereum, it's obviously speculation, but maybe these cryptocurrencies, these assets, will increase in value more than the gain that you stand to make on paying down the debt. So what I'm saying here is if you were to invest in Bitcoin and make your 5% per annum using cryptocurrency.com, it's possible Bitcoin has the potential to increase more in value than the difference between the interest you're paying on your loan and the interest you're going to receive on investing Bitcoin with the cryptocurrency app, crypto.com. For example, your interest rate on your car loan is 15% per annum. You're going to get 5% per annum investing Bitcoin. You've got a 10% difference. The gamble here is that Bitcoin needs to make more than 10% per annum for this to be worthwhile for you to invest in Bitcoin as opposed to paying down your debt. Now, this gets into another whole space of looking at risk and reward and money management. So I'm going to leave that for now and leave that decision up to you. Do your own research on that. And I'm just going to dive into the portfolios, which I've set up to figure out how we can earn 8 to 11% interest on our money. So there are a lot of numbers coming out in this video. I'm going to read them off the screen so I don't get any of them incorrect, or as best as I can get them all correct. I'll leave them on the screen here as well, this side or that side, and then you can follow along with that and also check them out on the website because they'll always be updated whenever crypto.com changes their interest rates. Now, there are several different tiers in the crypto.com earnings platform, and they vary according to how long you deposit your cryptos for. So you can have a flexible plan, a 1 month or a 3 month. The other thing which varies is how much MCO you are staking. So that's another one of their tokens. If you have got your own crypto debit card, you stake 50 MCO, you'll get a special MCO card like a debit card, which doesn't have the increased earn rates on them. But if you stake 500, you'll get an extra 2% on pretty much all of these figures, which I'm going to talk about. Now, to have 500 MCO at a $5.20 valuation of MCO is around $2,500 to be able to then have that 500 MCO and stake it to get the extra 2%. So I'm going to assume we don't have this. I'm going to start at the lower rankings of the interest earnings, but I'm going to include that we are looking at the 3-month fixed term, not the flexible, not the 1 month, but we're going to invest for at least the 3-month fixed term. And then you can just keep compounding these back to back, do another 3 months after another 3 months after another 3 months. So up on the side of the screen now, you'll see all of the cryptocurrencies on their site. There are several more, but just to keep it nice and easy, using the ones that I'm going to use in today's examples, I've just got them here, and they range between 4% per annum, anywhere up to around 16% per annum, because we're assuming we don't have 500 MCO staked on their platform. So at any time during the video you want to refresh your mind on what all these figures were, come back to this point in the video. I'll leave a timestamp to it as well so that you can get an idea and start to do your own calculations with how much you want to invest into the platform. Okay, let's dive into the numbers. I've got them on the side of the screen here, so that's why I'm going to be looking away to read them. Portfolio 1 is a really nice, clean, simple, easy to use portfolio, and that just consists of 3 different cryptocurrencies, one being CRO, the second being USDT or any other stable coin that is USD based, and then the third being Bitcoin. With this portfolio and the rest of them, I've split them up in a way that meets the minimum investment requirements from crypto.com. For example, what I mean is CRO, you need to have at least 5,000 CRO staked. So I don't want to give you examples that you can't actually use in the platform. So we have 50%. And at the moment, the coin is around 10 cents. So that is about $500 US. We've got $1,000 US to spend. And so we're going to stake $500, 50% of our total portfolio into the CRO, and we're going to make 16% return. Now, the other 25%, about $250, that is the minimum that you need to stake for any of the USD stable coins. You've got USDT, you've got USDC, you've got PAX, TUSD, and DAI. I think there might be one more on there, but essentially you need $250. So that's 25% of our $1,000. Now with the last 25%, we're going to stake that with Bitcoin, and Bitcoin gets us 4.5% return per annum for the 3-month fixed term. For the USD coin, it was 10%. I don't think I mentioned that. So yeah, 10% on that one, 4.5 for Bitcoin, and 16 for CRO. If we average all of that out, we end up with about 11.5% interest return per annum. So that's how we're getting our 11%, as I mentioned at the beginning of the video. Now, of course, there is a lot of risk when it comes to cryptocurrency. These coins could drop 50% in value. So although you're going to get 11% return on the crypto itself, maybe in dollar terms, you could lose out big time. So we've got to understand this, but there's also the big upside potential. For example, Bitcoin, who knows, maybe it goes 5x, 10x, 20x from where it is right now. Maybe it just goes absolutely bananas. Maybe CRO goes bananas as well. You know, at the moment it's at 10 cents, maybe it goes to $1. We don't know. This is all the speculation that comes into our investing. Of course, with USD, any of the stable coin against US dollar, it is basically going to stay around the same unless that company goes out of business, they go belly up, and then all of that USD that we've invested is worth nothing. So that is the risks. Obviously, for all of this, do your own research, not financial advice. I hope you get the point. I'm no financial advisor. I'm a guy here on YouTube with a fake plastic plant in the background, just showing you what I do on these platforms. So that was portfolio 1. Now with portfolio 2, it's kind of similar, except I've given us a little bit more room to grow and removed the USD and replaced it with Ethereum. So that is about the minimum that you can invest on the platform for the interest. So you need to have at least 1 Ethereum invested. And at the moment, Ethereum is about $237 US. So of course you can put 1.05 Ethereum in and stake that for 4% return per annum. And so if we look at the average on this portfolio, 50% being CRO, we're going to keep that as, again, 4% on the 25% of Ethereum. So your portfolio is $250 of Ethereum, $250 of Bitcoin, $500 of CRO. We're going to get 16% on CRO, 4% on Ethereum, 4.5% on Bitcoin. Now the average of that is about 10% interest per annum if these numbers keep up throughout the course of your 3-month fixed term interest repayments from crypto.com. So yeah, you can see there are a lot of numbers that I'm spitting out here. I've got one more bigger portfolio to come, but if you're finding value in this, be sure to hit the like button down below. Be sure to subscribe as well. Share it with someone that you think would find value out of this. Maybe they're just starting in cryptocurrency or into investing and they're just looking for something to learn with, to play with. And that's something that I think is pretty important, to be able to play with some money that you're not afraid to lose. I'm sure you've heard that before. Just invest what you're willing to lose. And in terms of $1,000, I know that's a lot of money for some people, but let's work at that. You need to at least have something that you can invest in and to learn and to play with. And I see this platform as a really good way to learn to start to buy different assets, learn how to put them into an investment, watch the investment come through, do something with that interest that's come back, maybe reinvest it again, maybe sell it, do something else. So I see it as like a really easy and friendly way to get started into the investment space. So onto our third portfolio, and this one I'm upping the investment amount just a little bit to $3,000. And the reason for this is I want to give you some idea of how we can expand this out and just sort of cover our bases across different assets, because in cryptocurrency now we do have digital gold and a lot of different physical assets are being digitalized on the blockchain. So for example, in this portfolio, we're going to use Pax Gold, and that basically just represents 1-for-1 gold. So diving into the numbers for our $3,000 portfolio, we're going to put 20% into CRO, which is about $600. Next, we go 20% of Bitcoin at 4.5%, another $600, another 20% in Ethereum at 4%, that's another $600, another 20% into one of the USD stable coins, and that is at 10% return per annum. So that's $600 again. And we've got the last 20% I'm going to split between a cryptocurrency project and then the gold that I just mentioned. So we're going to put 10% into the gold, and that's going to return us 4% per annum. So that's $300, which leaves us $300 left. And I'm going to use ICX in this one, Icon. They got a really great project. I advise you to go and have a look at that project. I'm not advising you to invest in it, but if you find it interesting, definitely check out the project. They have an interest return on the platform of 8% at the moment. So that's another $300. If we add up all of those interest returns and average them out, it comes out to be around 8.1% return per annum. And that's on our $3,000. So 8.1% on our $3,000 is $243 per annum. Divided by 12 months, nets us around $20 per month on our $3,000. Now, of course, that is only if these cryptocurrencies stay at their exact same price. We are speculating and we're buying things to look for capital growth in the long terms. I guess you could say we're expecting these to increase in value. At the moment, we're getting 8% return on our $3,000. But if this $3,000 goes up 3, 5, 10 times, then we're still getting 8% on the cryptocurrencies, not the dollar values. Following on from that, I guess we could talk about the potential in the capital growth. Like, what is the point of doing all this? Why not just leave it all in a US dollar and just get the 10% return? That's also another option. You could literally just put $1,000 into one of the USD stable coins, get your 10% return per annum, and just be happy with that. That's not a bad way to go. Obviously, you don't get the capital growth on the currency itself because it's a stable coin backed against the US dollar. You probably only get growth if the US dollar went up against the currency that you are currently in. So for example, I'm in Aussie dollars, so I could buy myself US dollars, watch the Aussie dollar drop, if it drops, of course, and the US dollar go up. So I'm still going to make a few percent holding US dollars instead of holding Aussie dollars. So that's one potential to make an income on that as well. As I mentioned, for portfolio 3, I wanted to divide it up into a few different assets. Like we had crypto, we had the high risk and the low risk cryptos. I know it sounds a bit paradoxical saying that there are low risk cryptocurrencies, but Bitcoin, Ethereum versus something like ICX, we could say that Bitcoin is less risk of going under than ICX. And then we've also got the US dollar stablecoins in this portfolio, and of course gold. So that's another asset class within this portfolio. So I tried to balance, give us some sort of diversification across different asset classes within the digital space of cryptocurrency. That's kind of the beauty and the amazing part about crypto. So if we wanted to get capital growth on the portfolio, we have to keep in mind that coins like the US dollar and potentially gold are not going to rise as much as something like ICX, Icon, Ethereum, and Bitcoin. Like, these have bigger potentials to grow because they are just a project out in the ether doing their thing, whereas the US dollar is tied to the US dollar and you're only holding US dollar coins. So with that in mind, we should evaluate where we could expect our portfolio to grow to. If we wanted to have a 5 times portfolio growth, so from our $3,000 to $15,000, we would need to see the gainers in Bitcoin, Ethereum, and ICX. We need to see them do like 7 to 10x in order to balance and bring up those other assets that we've got in US dollar and in the gold cryptocurrency. If you want a little more information on that, hit me up in the comments down below. I know I said lastly already, but lastly, if we wanted to increase the percentage return on our portfolio, we could stake 500 MCO, and that would bump up all of our interest returns by 2%. So say on Bitcoin, instead of getting 4.5% interest, you'd get 6.5% interest. Ethereum, you'd go from 4 to 5. So all of those notes you can see on their website and in the app, but for the majority of them, you'd go up around 2%. So that's it. That's how we can get between 8 and 11% return on our $1,000 that we are going to invest. I wanted to thank you guys for watching to this point in the video. If you wanted to jump on board with crypto.com, I've got a referral link in the description down below. If you use that and stake 50 MCO on their platform, on the app, you'll also receive $50 US in MCO, but you need to have purchased the 50 MCO first, stake that, and then you'll receive $50 worth of MCO into your account. If you found it useful, give us a like down below. Be sure to subscribe and tune in for more of these videos as they pop up. There's a lot more content to come on cryptocurrency, stock market, and of course the property cycle. So stick around, be sure to like, subscribe, share it with someone that you think will find this interesting and could possibly use this to make their own portfolio and get some interest return on that. If you have any questions, leave them down below. Be sure to join me on Instagram and on Facebook. I have the links down there. You can ask me questions over on that. Thank you to the guys who have clicked on my link and added me as a friend on Facebook and just started chatting. Appreciate the reach out there. I look forward to seeing you guys at the next video. Until then, have more fun to get more done.